Vinit Sambre, good morning. Thank you for joining us. The time to panic in small and mid-cap stocks, is it over, or you can still churn your portfolio out of small and mid-cap stocks? I mean, everyone saw this coming. It's just that when it hits you, you regret.
Yeah. Hi, good morning. Thank you for having me on the show. So,
Only person who's
I
smiling
think these
today.
are.
Good, good,
Hello?
good, good. You're the only person who's smiling on the show today.
I want, one has to remain detached, otherwise, one will get involved and then people will panic on, personally as well, which we would like to avoid. So, Nikunj, see, basically, I think first of all, small and mid caps in general, as I have been telling that these are categories which had to be looked from a long-term perspective, and last 3-4 years were very strong for across the equities, and I think it's time for some reversal as of now. And when I actually think about a lot of the factors which we keep monitoring, I think the most important factor comes about is the growth in the earnings. And I think this is the first time after a few years we are seeing moderation. Cuts have happened. More importantly, results are actually reflecting what is happening as far as the earnings are concerned, which was not happening over the last 3 years. So I think to some extent this should be considered as a good, healthy kind of a correction linked to how the fundamentals are changing. Now, what you mentioned, whether one should panic or not panic, I would say that, large part of the returns which came about over the course of last 3 years were also a factor of liquidity and new investors coming in. And I believe that while we have seen cuts to some extent linked to the fundamentals, but cuts linked to flows, sentiments, I think those could still overpower as people see returns getting derailed for a longer period. And I think that is where maybe some bit of more volatility could be there as far as the category is concerned. But as I keep saying, good companies, good businesses, they will last all the volatility and they will keep creating wealth for the investors. So from that perspective, I would say that it's more about not about the levels of the market, but your ability to stomach these volatility and stay put with some of the fundamentally strong businesses is what I would sort of advise.
A lot of follow-up questions on perhaps the basic approach for small and mid-cap stocks. First, I'll start with the AMC, which is at the industry level. Are there any signs of redemptions or SIP cancellations in small and mid-cap stocks? Because performance will always attract returns, and underperformance will always lead to panic. So far, what's been the scorecard for your AMC, and what do you think is happening in industry specifically to inflows into small and mid-cap stocks?
So frankly, the inflows as far as the funds are concerned has not really got affected. Maybe some marginal changes, which one can't call it a trend as of now. That is number one. Where we have seen maybe the volumes getting a bit dry are maybe at the PMSS level, the HNI level. I think there's a first kind of a big maybe market shift which some of the new investors are also witnessing. Maybe they are waiting and rethinking about how one needs to reallocate. So I would say that if this sustains, continues, it will definitely drift down to the funds as well to some extent. This is all cyclical. And let's say if the visibility because of budget or whatever event actually leads to some improvement, I think maybe it may not have that big an impact on the flows. But till now, we've not still witnessed big change as far as the flows are concerned. I mean, nothing great to talk about as of now.
Are you maintaining strong levels of cash in the small and the mid-cap portfolios, or you are fully invested and you are not looking at changing your portfolio rejig within the small and the mid-cap?
So the stance which we have always had is that we generally remain invested, but especially in small and mid caps, I mean, we have always kept between 4 to 5 cash as a strategy, just to maybe have some kind of liquidity at any point in time. So I think we are just on that. Maybe in small cap we have raised marginally beyond this 4-5%. We are around 6%. and hence this fall we are actually monitoring very keenly wherever we feel that opportunities are emerging, valuations are becoming decent, where the businesses we like but we didn't like the valuations, we are definitely looking to add into those.
Asking you a question, and I'm not making this as a small and a mid cap special. Last question on small and mid cap. I asked this question to Ramdev when he joined us on Monday. I asked this question to Kenneth Andrade when he joined us yesterday. So I'll ask you the same question. For someone who has exposure to small and mid cap stocks now, there are three options. One, take a hit, cut your loss, or take less profit and get out. Second, add more as small and mid cap stocks have fallen. And third is convert it into large cap. Switch. What should be a best strategy for someone who has small and mid cap stocks? And when I say someone, everyone who's got small and mid cap.
So if Nikhil, let me be very frank and open about this. And if you're talking of the small cap stocks, not funds, uh, generally it is the tendency that as the bull market keeps progressing, the quality of investment keeps getting downgraded, and even let's say poorly run business or poor businesses, generally they show up good numbers, and there also the narrative changes strongly. So I think a large part of the capital keeps getting drifted to businesses which may not be strong enough and are driven more by narrative. So I can say that large pool of people who might have invested into small caps with not a strong understanding and not having understood the cycles for long. I think it's a clear call that they should move out of the small caps and maybe allocate. If they want to remain in small cap, it is a good category for long term. Just go with the funds with a long term track record is what I would suggest. Because this has been the trend, and this is what we are observing also when we look at the retail shareholding pattern in a lot of these companies, they have really gone up. So that would be my stance. And the other point, whether one should move to large cap, I think those are asset allocation tactical questions which would be pertinent for large investors, wealthy investors who might have had good amount of exposure to small and mid cap, and those exposures, if they have gone out of proportion and are breaching their targeted kind of weightage, definitely they should shift to the large cap. But somebody who has maintained the small cap and wants to think about wealth creation over long term and is not breaching in a big way, I think it should continue. They should just sustain, maybe add more in the downfall. We've done analysis, Nikunj, that in a falling small cap category, if one invest via SIP, they actually tend to create very good outcomes, even on an absolute level if the index is low. But on a SIP basis, they would still sort of continue to show good returns because they keep averaging at the lower price point. So I would suggest that for really people with patience, long-term investment objective, they should continue, and they should maybe add at the lows, keep adding at the lows.
All right. Hi, Vinny. This is Shrishti also joining in. Good to be speaking with you. Now that we have understood the kind of approach that one should have in the mid and the small end of the market at least, but help us understand that where do you find value in the current environment? You were just highlighting that maybe in this downfall, one can look to add and increase the exposure to help us with some sectors that you are bullish on.
Okay, so see, when we talk of value per se, excluding maybe banks and insurance, we don't see that there are, from the cheapness perspective, the valuation is really very attractive in any other segment. Because as compared to the history, I think most of the categories, while they might have seen some correction, but they still rule at a valuation levels which are higher than the long-term averages. But what we are thinking about is where are the businesses which are at a let's say point of inflection. So let's say, for example, specialty chemicals. If you are seeing the results for most of the companies, they were on a declining curve till 2 quarters back, and now we are seeing signs of stabilization. Maybe this is a first trend. 2 3 quarters down the line, they start showing better growth. So I think there's a point to look at those. Consumption overall, broadly, both discretionary, non-discretionary, has been at the low end of the curve. The companies have not seen growth for a while. Now, imagine that there are some benefits which comes out of budget, or as states are doling out more money towards welfare, it is possible that the consumption as a category starts revising up. While the valuations may not be the best, but at least the businesses are poised to inflect whenever things turn. So I think we are sort of thinking about those when we are looking to build stocks in the portfolio. Cement is one more sector where they have not been able to take price hikes for long. While we all have a positive view on cement sector because that sector is going to be proxy of India growth story. And from a low pricing environment, whenever the environment sort of recovers for them, I think that's where we can see them generating better returns. So I think that's how we are sort of thinking at the moment.
So, Vinit, if the starting point is, let's say, Jan 2025, for small and mid cap as a category, and I'm talking about a fund here, not individual stocks here, should one expect CAGR returns in next 3 years, or CAGR return would be a difficult task?
So I'm confident that 3 years we can definitely expect CAGR returns because whatever let's say the challenges which we would face after very strong growth environment last 3 years, I think all of these should settle down over the course of next 2 or 3 quarters. If you actually analyze the top 500 companies profit over the last 4 quarters, Nikunj, on a sequential basis, we were actually seeing the profit decline. Maybe just one quarter there was flat or slightly up, but last 4 quarters we are seeing sequential decline in profit for the, let's say, the top 500 companies of Nifty. Now, at some point, we will reach the base for these companies. And as I said that, only one part of the economy was firing, which was driven by the government capex. The others were still under the low cycle. And as these cycles improve, the low base formation has happened. Maybe at some point mid-year, we will see, we'll be talking about recovery. So I would say that sentiments move much more than the real fundamentals. And hence, it is good that today let the sentiment lead to some more corrections in the market, but those will become good price point. You keep investing next 3 years. I don't think there is any breakage in the story as far as the India growth is concerned.
Vinit, what about IPOs? That again, in a sense, had become the go-to space. It's so strange. A month ago, everybody was just praying that they should get allocation. Jagad jagad ke allocation le rahe the. Now jagad jagad ke they're selling their allocations, right? You know what I'm asking you.
So I think that is what the kind of flows which was actually driving all of these behavior as well. And by the way, so actually, frankly, I missed your earlier part. I think you are talking of the IPOs and the QIPs, right, Nikunj?
Sorry, I missed your
Hello?
voice there.
Sorry, I missed you.
No. Go ahead. Bit of a, I think bit of a cross connection here. What did you hear, by the way?
So you were talking of IPOs and QIPs, right?
Yes.
The allocation.
Please go ahead. Yeah. No, all I'm saying is the party in IPO is over.
Yeah, I mean, see, as I said, everything is cyclical. I mean, as things on the one side, if it keeps going and crossing, the pendulum moves on one side, it will also move on the other side. And I think for now, there will be some momentum which will see, some kind of deceleration for even the IPOs, all these anchor allocations and all. And I think for a lot of the companies which came up with IPOs, QIPs, we are seeing they are back to those price or even lower than that. And now there are no buyers. So I think that's how the sentiments change. But which is where I think for the long-term investors, if they feel there is a value getting created, then one should really be a bit bold about acting at those price points.
All right, but Vineet, how do you plan to play the whole consumption story? Because now in Q3, what we are getting to hear from the companies, be it from the likes of Maruti Suzuki, where they're highlighting that the rural sales is actually now growing at a 5 times the rate that we are seeing in the urban consumption. Similar is the commentary from HUL, where the rural sales is holding strong. So, given the much-awaited turnaround in the consumption, can rural sales actually push the whole consumption story around? And is this a good story to go ahead and start putting your money in?
So that's the view which we are also trying to sort of work with as of now, because relatively we have seen across the board, both discretionary and non-discretionary, the rural side of the story seems to be playing out better than the urban. And urban is also getting affected because of the credit availability. Banks have gone a bit tight on the loans and all. So maybe it will require the credit environment to become slightly more normal before we talk about the urban recovery. And also maybe the employment generation has to be or the wage growth. We are seeing there is a moderation in the wage growth overall. So I think those needs to sort of improve before we can call big view on the urban side. But the rural side definitely seems to be showing signs of recovery. And I think selectively one could look at playing those. But frankly, till now, wherever we have invested, let's say two-wheeler or some few FMCG companies, we have still not seen a big up move as far as the stock returns are concerned, but we are hopeful.
Right. Okay, Vinit, great to have you on the show. We'll let you go on that note. Thanks for your time today.
Thank you.
Okay, let's just